Huarong got downgraded by Fitch. I do wonder if you feel that we're closer to the end or the beginning of the Huarong story, and what the risk is of contagion.
Well, we think that we are likely closer towards the end of the story, and Huarong's contagion risk is very real, as it is one of the big four AMCs, or asset management companies, in China, and is a systemically important financial institution. We think that there is a low likelihood that the PBOC or the Ministry of Finance will allow Huarong to sort of enter a messy default scenario. And that's because if it did, both the onshore and the offshore credit markets in China will likely see tremendous spillover effects. And therefore, we don't think that China, with the PBOC's mandate for financial stability, really wants to see that happen.
So considering that government's there to play backstop, what sort of impact has the Huarong saga had on the broader appetite for dollar bonds in China?
Well, spreads have widened out in both the investment grade side as well as the high yield side. And we think that that actually creates a buying opportunity for China-related credit, or broadly Asia-related credit, where fundamentals are still sound, and yet valuations are still meaningfully wider than, say, their U.S. counterparts or European counterparts. And so we think that what's happening in Huarong is creating a buying opportunity for the rest of the market.
Will investors, though, want to get in right now in China? I mean, if we've learned anything from the Huarong saga, is how uncertain and how opaque the market still is. When it comes to Huarong just announcing that they won't publish their earnings again, that announcement was only in Chinese, very short. We haven't really seen it in the right official statements either. It wasn't in the Hong Kong exchange. It was in the interbank and foreign exchange trading system. So will investors become a bit pickier when trying to get into the Chinese markets, into Chinese firms?
Yes, it has always been the case when analyzing Chinese credits that there are some issuers with very opaque structures, and therefore we want to avoid those kind of issuers, right? But then, when it comes to a systemically important financial institution, that was rated single A- by the credit rating agencies and enjoys very strong state support. A big part of that credit rating is coming from the state support. And, Huarong is kind of in cleanup mode right now, credit cleanup mode. And so we think that they will likely emerge. They're trying to emerge from this with a cleaner balance sheet, right? They're going to try to aim for some non-core asset disposals going forward. Some of the assets that have been accumulated under the previous management, which we all know that didn't end so well, and so we think that they're trying to right the ship right now. And but to your point, it is hard to analyze some issuers' opaque structures, right? Some LGFVs and some of the other more local kind of debt that we need to be careful of those issuers when investing in China.
Jonathan, here in the U.S., we do have the FOMC meeting this week. Anything that investors should watch out for?
Well, the market is treating this as not much of unlikely to be a market-moving event. And we think that the changes that we'll see from the last meeting are going to be incremental. Right? We think that the Fed will acknowledge that the economy has become incrementally better than what they observed in March. March was when the GDP forecast was massively increased in their summary of economic projections. This time, the adjustments are going to be more like tweaks. And we don't think that they're going to announce tapering of quantitative easing at this meeting, maybe further down the road towards the second half, tail end of the second half of this year. and certainly no rate hikes. So, we think that it's not really going to be much of a market-moving event, more of a just acknowledging that the economy has continued to improve, but that there will be still risk on the margin to be aware of, such as the potential for COVID resurgence, given what we've seen around the globe. So yeah, it's I think the Fed, the press conference is going to be the interesting part. I think Jay Powell will be grilled on when he's going to start pulling back on monetary policy. So we'll be watching out for that.